Thank you very much for the kind introduction, and to Fudan University and the China Forum. That's a very exciting time for all of us here in China and the rest of the world. In the limited time that I have today, initially I was told that I had 1 hour, and then it got shrunk down to 15 minutes. And you know, given you give a professor the chalk, it's impossible to give it up in that period of time. But I will try to condense what I say today, and then we could see where we go with some of the questions or discussion in the open places later on. Can I have the next slide, please? I think the major issue that we have to understand is that to understand the world and financial systems, and to understand the integration that we're seeing around the world today, it's necessary really to think about what the functions of finance, my area, really are. If we keep the functions in place, then some of the questions that we talk about, how to make China and the Silk Road and the Asian area more productive, more efficient, and growing, relate to really understanding what these six functions that I have described here on the board, and how to make those six functions more efficient. Basically, one of the major functions, obviously, of finance is to enhance trade, enhance transacting, allowing for more efficient ways in which we can transfer goods, services, and resources domestically and internationally. The major second function that I have here on the slide is the idea of thinking about how to finance large-scale projects. And what I mean by large-scale projects is that we have teams of individuals, and we have corporations, or we have entities, and those teams do not have sufficient capital to actually grow and to be able to provide goods and services that the community at large needs. It could be a small person who has a business in an outskirts region of a particular area in Pakistan or in somewhere in China. And that person needs capital to be able to facilitate their ideas, where the marginal productivity of their capital is really greater than the cost of finance. Finance tries to marry together teams with capital and try to make that the most efficient and the most cost-effective way of generating capital for actually financing projects. So that is a major important thing for the development of China and the rest of Asia and the rest of the world, is capital. Marrying together capital with ideas, marrying together capital with teams, marrying together capital with corporations, and thinking of that as a major function, how to facilitate the interaction, the marriage between the needs of capital and the providers of capital in society. A third function, which is very important, that we have to always keep in mind, is the transfer of resources. The idea that we have individuals now who want to save for the future, whether it's for travel, or whether it's for homes, or whether it's for education of their children, or whether it's for health care, or whether it's for other charitable or giving needs that they might have. The idea of creating a system which allows for individuals to either save or insure or to move forward resources, not only within a country but within the international community, is a very important function of finance. The fourth function is really the idea of risk transfer, risk sharing, risk reduction. The whole idea of thinking about risk and how we manage risk, how we think about what risk is, and how we allow for entities and individuals to think about best ways to risk transfer and to hedge, or to actually make their acquisition of resources and what they know and can concentrate in the most productive without taking risks they don't want to take, that they can think about transferring to the market more generally. If markets allow for risk transfer, we allow for growth. If one has to encompass or take all the risks onto themselves, it may be inefficient because someone else might be able to take those risks and carry them forward more efficiently. A society that allows for efficient risk transfer and risk sharing allows for an ability to grow more quickly and more efficiently, and to allow for commerce, international trade to grow more productively. The fifth important function of finance is really the idea of pricing and valuation signals, the idea of thinking about how markets will give us price signals. We heard earlier about the aspect of having an ability to know what markets are telling us. Are markets telling us that these are the prices that we can trade at? Are these the prices in the stock market or the bond markets or the other markets around the world, which gives us sufficient signals? Those signals allow for decisions to be made efficiently. And that means that access is very important to the markets around the world to make them competitive, and to use the market signals to decide where to raise capital or where to buy back capital from or where to deploy capital. Without using market price signals, it's very hard to know. It's very hard to know how to allocate capital, because one is trading in a private market as opposed to using the information, stealing the information from the capital markets. So establishing efficient markets, and allowing for prices to signal is a very important part of the finance function, and very important for the development of the region and the development of countries generally. And the last function that I list here is the reduction of asymmetric information, market frictions, and deadweight costs. The idea that we have to generate trust or figure out ways to generate trust so we can interact with others in the global economy. And that trust aspect, the idea of creating trust, has a huge part in finance. The ability to actually marry together, as I say, teams of individuals with capital requires that information asymmetries be reduced, or ways figured out to reduce asymmetric information. These functions are the same. The functions are the same in China. The functions are the same in Russia, the same in the United States, the same in Europe. The functions are the same. The institutions that provide these services, the institutions themselves are not the same, but the interesting part about globalization, the interesting part about learning, the interesting part about growth of our economies is that each of the institutions that serves or tries to provide services within these particular areas is really very fluid. It changes. They change all the time. They evolve all the time. They're not static. But what is static are the functions. And making money in finance, or thinking about how to make money in businesses, is really trying to think about how to provide these functions, one of these 6 functions, or all of them, or several of them, faster for individuals, for entities, for governments, for corporations, providing them faster. Finance compresses time. Finance makes it faster to be able to transact efficiently. Finance makes it faster for entities to raise money. The ability to get money, to marry teams together with money, is an important part, and that is done more quickly. The more quickly it's done, the more efficient it is in terms of providing what is valuable through the production process. The third, and so speed is important, the transfer of resources, making markets work, thinking about how market mechanisms are better to make things faster, and also the idea of thinking about how to reduce information asymmetries more quickly. The second important aspect in terms of not only speed, but the idea that what we're seeing around the world is a way to create in finance individualization, not one shoe fits all, but an ability to serve the financial functions and needs more individualistically of investors and individuals, and not necessarily have to make it as a big block to be able to handle the needs. So the ability to actually create more individualized solutions, more individualized needs, and that means that we need to see the development of many new techniques and technologies that allow us to provide each of these functions more efficiently. And the third really is flexibility. Flexibility is one of the key aspects of finance. How do we do things and make things more flexibly? What I'm saying about finance also applies to business. It also applies to corporations. It applies to individuals and how they conduct their affairs, making things faster, more individualized, and also more flexible. What we are seeing today is basically that one of the things that is interesting is, just to give you an illustration of this quickly, is the idea that we are seeing now through the idea of telecommunications, computing technology, and finance theory, a tremendous evolution to having decentralization, more the idea of thinking about how to create an internet system, a system of finance that's changing the whole nature of the structure of banking, or changing the whole nature of the structure of how we provided financial services in the past. So that is a revolution that's happening in the United States and Europe, and most likely also I know in China, where you have Alibaba and other entities are trying to provide these finance functions that I talked about more efficiently. And the idea is really thinking about having it be that the decentralization, is it going to be the case after the 2008 financial crises that banks are stratified, atrophied, and cannot provide financial services in the most efficient manner? As a result of that, then others who have horizontal structures come into place and actually pretend to now provide financial services. And so the growth of new technologies and new innovations themselves are going to add a tremendous amount of value. The most impressive piece of news was the idea that what really is amazing to me, and we have to think about, is all we learned in accounting and finance since the Medici era in the 1500s was the idea of who owns the ledger, who controls the books, who has the records. And the records are the key, because that's the trust. We trust in terms of money and making deposits. We trust in terms of securities that we buy to invest in, or bonds that corporations issue, or the government issues. The trust is in the ledger. Who owns the ledger? And that has always been a vertical system, where a bank owns the ledger or an insurance company owns the ledger. The interesting thing with the idea of the blockchain is the ledger becomes horizontal. The ledger is controlled by miners, so there's an interaction between the consumer, the producers, the merchants, and the ledger or the blockchain, which is a horizontal structure. That horizontal structure leads to tremendous change in the way these financial functions are provided to the community at large. And that is a major innovation that we're seeing right now, is who's going to have the idea, who's going to be the miners, who's going to be the ones that control the ledger or the information. Because unlike the system of the past, which was a snapshot, the world of finance, the world of commerce is changing from a snapshot to a movie. It's a sequence of transactions, not just clearing a transaction. That's the most important thing in understanding how to individualize, understanding how to make things more faster, and how to make things more flexible for our consumers. So corporations or entities, small merchants, in an inclusive society, reducing the cost of any of these 6 functions that I talked about can be handled through the computing systems of the world, through the idea of a blockchain, recording of transactions in the sequence of transactions. And those sequence of transactions allow for tremendous growth, innovation for our global society. So I think that is going to be a tremendous competitive force in how finance will change, and how the internationalization of finance will also affect the world. So moving from transaction processing to transaction analyzing is a most important thing going forward. And also I think, though, that the regulations themselves is that regulators tend to regulate institutions. And what I want to really lay the ground is innovation and new ideas come in really satisfying any of those 6 functions more efficiently in finance, as I said. And as a result, regulation will be behind innovation. And we don't want regulation to actually create a situation where regulation tries to make things slower. Regulation tries to actually regularize, and regulation tries to reduce flexibility, because individuals, entities, corporations want more flexibility, not less. More individualization, not regularization, and also faster and more speedy. So the idea, there's a huge balance that we need between infrastructure and the placing of infrastructure and regulation itself. And the idea of how to make regulation flexible as new technologies in computing and new technologies in communications and in learning actually cause there to be change that's necessary and not to be impeded. Because in a global society, opening up a global society means that if there's regulations that create inefficiencies, that functions mean that those services will be provided somewhere else. And to be a competitive country, to be a competitive region, means that you have to understand how these regulations or rules which are impeding these functions themselves result in slippage, that new ideas, new things are done in other regions of the world. And finance is very fluid. The idea to do things globally is easier, much easier in finance. So China opening up, creating a situation where markets are opening up, finance markets are opening up, will allow corporations and entities and individuals in China to be able to use their resources more efficiently and finance their activities more efficiently, transact more efficiently, get information as to market prices more efficiently, risk transfer more efficiently, and get capital investments in a global world. That's a dream that we all have to move towards, and have an ability to have this individual satisfied more quickly and more efficiently, and at the same time more flexibly. Thank you very much.